Good afternoon, everyone. Allie Corman, Justin Nielsen here with a look at the stock market today, where we did see a bounce in the market, but can we trust it? We'll get Justin's thoughts and we'll check in on a couple of bright spots in the market.
Yeah, certainly. I mean, it's not all stocks are created equal, right? It's almost like the return of this bifurcation. And so we'll take a look at Green Brick in the home builder space, also Fastenal, more on the industrial side of things, and then we'll end with KnightSwift in the transportation.
We will get to that, but first, let's take a look at the major indexes. So here's the NASDAQ Composite finishing the day up 0.9%. We had the S&P 500 up 1.2%, the Dow up 1.9%, and the Russell 2000 up 2.1%. So the NASDAQ is still below or right around that 50-day line, a snapback from the last couple of weeks of pretty severe declines, but that doesn't mean it's smooth sailing from here, Justin. What should we be looking for next? We can't just take this one day out of context.
Right, exactly. And that's the thing, is one day is it only gives you enough information for one day. That doesn't necessarily tell you about the trend. So that's why we look for the follow-through day to kind of get a confirmation that, you know, the rally is potentially turning and the trend is potentially changing. So this is just one day, day one of a rally. So that's good. Earlier today, I was talking about how I didn't like how low it was still in the range. If you consider Friday's action, it certainly improved from, you know, where it was this morning, but now here we are right at that 50-day moving average line. So I think that's going to be one of our first tests. You know, can we get back above that 50-day line? And then can we surpass the highs of Friday? You know, can we get back to that? And then before long, you're going to have that 21-day moving average line that you're going to be looking at. So there are some areas of resistance that we could potentially hit here. So that's something to just keep in mind and be aware of. Same thing over with spiders, the SPY, the S&P 500. That one looked like, hey, here's a bounce off the 50-day moving average line. Isn't this what you want to see? Well, notice that at the highs of the day, we got up to that 21-day moving average line, and that's right where we got turned away. This has been an area of resistance for a couple weeks here. That doesn't mean it has to last. It almost seems like the indexes need to resolve themselves one way or the other. Are they going to break through that resistance? Or are they going to break down below that support? But as those moving averages kind of converge together, indexes are going to have to make a decision one way or the other. But to that end, you know, it's not like all the stocks are the same. David Ryan jumped on the show this morning on IBD Live, and he was talking about, look, there's bright spots out there. If you look at you know, some of the industrial, some of the materials, you know, you can kind of take the sector spiders and the sector funds and take a look and see that there are some stocks that are, or ETFs that are above their 21-day moving average lines. XLI is right there at its 21-day moving average line. You've got XLU that looks like, I mean, if you took out the fact that this is utilities, this would look like a breakout. You'd be like, hey, that's not too bad. You know, you've got also XLE and XLF that on the weaker side, you know, these are ones that are coming up to the 50-day moving average line. And here again, you could see, do these get resistance at this point and then turn lower? So there are those that are looking much stronger, those that are looking vulnerable. So it's just a matter of, do we get back to where we were in October, early October, where it seemed like everything was kind of rowing in the same direction? Or are we going to get more of this bifurcation where some stocks are participating and others are in serious corrections?
Right. Well, if utilities are leading, what does that say about the kind of market we're in, Justin?
Defense, defense, defense. You know, another one to look at is XLP. You know, this is consumer staples. This is not generally, I mean, this looks really strong. Again, if, you know, you'd look at this and say, look, this is a break of a downtrend, you know, possibly getting up to new highs. That's great, but this is consumer staples. This isn't where you typically expect leading stocks to make big, powerful moves when it's being led by defensive names like the utilities and consumer staples.
Well, home builders also outperforming today. Yeah. So let's take a look at GRBK in that group. Green Brick Partners up 11%, heavy volume, breaking out of a consolidation here. And I can even spy that RS line blue dot on the chart.
Yeah, there's a lot of, this is going to be the theme for the day. So when you're a little unsure, you know, if there's stocks that you've been, you know, looking at that are breaking down, step take that step back and start looking at what stocks are showing strong relative strength. And I like to specifically look at the relative strength line to get an idea of what's holding up relative to the S&P 500. So yeah, you're looking at Green Brick Partners here. They had an initiation of coverage by Wedbush. So they started to outperform. That was one thing that's driving it. And this is a little bit of lower liquidity. It only trades about 500,000 shares, and it's a $30 stock. So that's under our normal 20 million in dollar volume that we like to see for liquidity purposes. But this is just kind of showing you how, where is the strength? Well, the home builders is one, because we've been talking about on this show, at least, we've been mentioning DHI. We've got Toll Brothers that is coming up tomorrow. There's just a number of these that have a similar look that have broken out in the last couple of weeks and are holding up well. You look at them and you're saying, what correction?
Okay, well, definitely want to keep an eye on the pockets of strength. So continuing along with that theme, the retail wholesale building products group, 14 out of 197. And here is Fastenal with a gain of 3% today and some nice volume behind the move after a pullback to its 21-day line.
Yeah, literally a nuts and bolts play here. This is what's got all the fasteners and everything like that. So you think of this as more kind of in that industrial type of play. But here we have something that pulled back to the 21-day moving average line. And even though the market was kind of going lower at the end of last week, this is something that was already getting support at the 21-day moving average line and just followed up on that support today. So you noted that it had some nice volume today, a nice break of a downtrend. This is one that we actually put on Swing Trader this morning. Right now it's got a good volume signature. There was a spike on November 30th, but we were seeing a spike in a lot of names on November 30th at the end of the month, and maybe some tax loss harvesting that was going on there. So the big strength today on volume is something that I think looks really good. And again, it's not to say that if you are a little nervous about this market, which I don't blame you, I'm nervous as well, there's nothing wrong with completely sitting out and kind of watching these from the sidelines. It doesn't mean that you have to feel like you have to play everything, play every day. This could just be something where you're watching it from the sidelines, kind of taking a breather, but you do want to keep your watch list maintained and note where that strength is. And this is certainly two areas that we've been seeing it lately.
And if you do play smaller positions and maybe tighter stops and taking profits quickly, what do you think?
Yeah, sometimes, pilot positions where even if it's just a percent or two, I mean, heck, it could just be like 100 shares, but it at least kind of puts it on your radar. Nothing puts something more to your attention than having some money on the line, right? This is why some people love the sports betting. You get a lot more excited about rooting on a team when there's some money on the line. And same thing can happen with stocks. Having a small pilot position, that's not going to necessarily do much damage to your portfolio, nor is it going to raise the roof on it either. But it does kind of draw your attention to things. So that's completely legitimate to do, but you don't want to necessarily, with a market that's vulnerable like this, be very aggressive one way or the other, I think.
All right, well, let's round things out with a transportation name in focus, and that is KnightSwift, KNX. A similar setup here to the last one that we looked at, up about 4% today. Some nice volume for this one too. And this pullback comes a couple weeks after a nice move for the stock on earnings.
Yeah, and so this is a group that we keep on seeing a lot of names come out of. We've talked about ODFL, ArcBest, JB Hunt. So there's a lot in here. Transportation was strong today, but some of that was, I think, a bounce back in the reopening plays. We saw a lot of hotel stocks acting well, Airbnb up a lot, even cruise lines. Those were some of the big leaders. But this is more on the trucking side. So a little bit different from the transportation of people. This is more of cargo, right? So this, again, it had, as you mentioned, that very similar to look to Fastenal. just kind of showing that, look, for as much as you might be looking at some of the stocks like, I mean, Zscaler, for instance.
The destruction.
Yeah, just, looks like a major destruction happening in some of these stocks. There are these stocks that look very different. And so it's just worth kind of keeping your eye on some of these where the relative strength is improving. They're getting support at 21-day lines, at 50-day lines, having strong bounces. Again, this could be a bifurcation where these are the stocks that are going to be driving the indexes forward potentially, whereas your former leaders are maybe not participating nearly as much.
All right. Well, Justin, thank you so much for breaking all of that down for us today. And thank you all for tuning in. We'll be back with more tomorrow morning on IABD Live, where we'll be joined by our Tuesday special guest, David Ryan. Looking forward to getting his thoughts at this critical juncture in the market. We'll see you there, everyone. And we'll also see you right back here tomorrow after the close. And after that, over for our leaderboard scorecard monthly webinar. So mark your calendars for that tomorrow afternoon as well. Thanks, everyone. We'll see you then.